All righty. Good evening, everyone. Welcome to the Hurley Investments Financial Services Commentary for July 31st, Tuesday of 2018. We've got about 17 total, but I'm kind of picking on some of those are there all the time. Bill, haven't seen you in a while. Nice to have you here. Lacey, nice to see you here. Haven't seen you in a while. Glad you guys, you two are able to make it. A guy and a gal there. Rich, make sure you give me a buzz when we're done here. Got a couple of questions for you. And Lance, would you give me a call tomorrow morning so we can also talk a little bit about some of the things that you have? I want to start today talking a little bit about, well, let me put it this way. A couple of people have asked me, Kevin, you've talked about the Williams percent R. And I copied and pasted some information here from a place that I get their newsletter. I probably get a bunch of newsletters, none that I'm really willing to pay for. But the Real Investment Reports has some section on technical analysis. And it's pretty interesting because they say, and I don't know what percentage or where they get this from, but Real Investment Reports says technical analysis is often dismissed by investors for three reasons. A lack of understanding of exactly what technical analysis is. If I was to ask you guys, what is technical analysis? Give it to me in your easiest form. What is technical analysis? Picture of behavior. Great answer. Fluctuation of stock prices or ETF. I'll change that to equity prices. Great answer. If I can throw my quick comment, historical behavior analysis. Rich. In fact, that's where I was going to go with. It's the past history of an equity price movement. That's all it is. It's the past history. So some people dismiss technical analysis because then they'll tell me, well, Kevin, past history doesn't guarantee future gains, future guarantees, future achievement. Of course it doesn't. Past history is the future, especially when we're in the market that we're in. It's pretty interesting that we have, we're in a time period again that's never been seen in history. Jamie Dimon, I have a pretty good article, basically said, hey, you know what? We're going through huge amounts of QE, or we just have gone through huge amounts of QE, and we're now going through an understanding of how to get out of it, how to back out of all the quantitative easing that we have. And he's exactly right. So we're now in a time period where we're looking at how we're going to back out of it. Number two, an inability to properly apply technical analysis to portfolio management. It's really interesting. What they're trying to say is that the inability to use the signals on a consistent basis. And it's really funny because if you were to ask me, and I'll go ahead and ask this group, do algorithms ever really work consistently? I guess the question is defined consistently, but do algorithms ever really work consistently? Because all an algorithm is taking that same past history, right? Taking that same past history and creating an algorithm that's somehow going to predict the future for your stock price or your stock movement, market movements. You can't predict it. You know, at certain times you're going to have higher volatility, like at earnings. 4 times you're going to have an earnings event. Historically, October is kind of our worst month because people are just fed up, overbought. We need a little bit of pullback. They sell off. Nothing's really having great earnings. They're all preparing for Christmas. It's there are some patterns, some business cycle patterns But to truly think an algorithm will predict the future, that technical analysis will predict the future, not usually one of your best bets. It comes back down to probabilities. And then the media narrative that technical analysis doesn't work. And it's funny because usually it's people that don't work, not necessarily technical analysis. But the technical analysis probably only has a 50-50 shot at best at being correct. With that said, I love their comment that they say there is no one method technical analysis that works for everyone. Now, I'm going to go ahead and take some of this out because I just realized it. I use the Williams percent R, and in the past, my comment that I said to you guys was is a mixture of the slow and the fast statistics, right? Well, it's funny because their study of the Williams percent R, they actually say that the Williams percent R is a momentum indicator that is the inverse of the fast stochastics oscillator. As a result, the fast stochastic oscillator and the Williams percent R produce exactly the same lines, only the scaling is oversold. Unsurprisingly, signals derived from the stochastic oscillator also are applicable to the Williams percent R. So I'm not necessarily correct on their looking at it, but plain and simple, a Williams percent R, in my opinion, is a mixture between the fast and the slow stochastics that give you maybe a better idea on when you buy or sell. And when you go to the overbought and oversold indicators, you'll kind of see it right here for overvalued, but let me go to a Williams percent R. There's your RSI at the top, but so let me just go to what I would technically use it for. I would use it on something like Facebook right now. And I just go in here to an overlay, and I primarily use a Williams percent R when I don't have one of my, I guess it's an indicator, I'm sorry, not an overlay, it's an indicator. Right down the bottom. I use a Williams percent R if I have my RSI or my MACD that might be just laying on a line. Usually I find it more often than not, I'll find it on my MACD. If I see a point in time where my MACD is laying on the line, when it doesn't give me a true indicator, when I can go through a week and it seems flat, that's when I'm going to come down to my Williams percent R. I'm going to look for another indicator to tell me where I should be. Is it always correct? Of course not. Right here, when I looked at it, it was oversold. My expectation was going to go down. Well, it popped up back up. At this point, way oversold. Hey, you know what? Came back down. Where we're at right now, excuse me, these are overbought up here. Right now, we're way oversold. So what's your expectation for Facebook? When we're way oversold down here, way overbought up here, sometimes it works, sometimes it doesn't. But looking at our chart right now, what would be the expectation for Facebook? Well, Kevin, you don't need it because you know what? There are no crossovers. And you are correct. I mean, in all honesty, we have a bearish crossover on the MACD. If you looked at Facebook on the RSI, we are oversold, and it doesn't stay oversold for much. Last time we were oversold, if I can go ahead and highlight that in yellow, right? Last time we were oversold, only made a run from 150 up to 220. Right now, the expectation is we should keep moving up. There's a but to it. What's the but, though? We're using technical analysis. What's the but? Abraham, back up as money continues to get in. Now just bumps of real life. That's a great answer. It's kind of funny. Lance said exactly the opposite. Probably will go down farther because they gave horrible guidance. But I'm just going with technical analysis. And it's funny because Abraham says I might be wrong, and Lance, you said maybe afterwards. What's the but? Should bounce higher, but we have a huge institutional indicator here. We broke the 200-day simple moving average. So institutionally, when you break the 200-day simple moving average, what typically happens, technically speaking? There you go. David, you're a quick typer. Past support is resistance. It exits. There you go. Yeah. In all reality, in real life, that support of 200 is resistance. How do you explain that? Well, once all those buy orders are exhausted, they usually reset sell orders at that point. Boy, the volume. Well, Kevin, maybe you don't know. We just saw an average volume in the 20s shoot up to 180 million, maybe 180 million in volume. That exhausts quite a bit of that, the buy orders that were there at 200 to hold it in place. Unfortunately, probably more sell orders will go in. Now, the good thing is those sell orders will go back in up there probably within the next month. Give me a bullish indicator. What's a bullish indicator for Facebook? Other than Zuckerberg losing like, 16 or $26 billion of wealth. Give me a bullish indicator. Let's throw another reason why we can't see this go higher. How about $3 billion of potential stock buybacks? We had a golden cross. Rich gave us a golden cross, but I think it exhausted that standard. Usually you're going to see what? A 3 to 7% increase in the next 6 months. And it's called a golden cross when the 50 crosses the 200, which is right there, which means we saw an increase from 190 up to 220. I'm pretty sure that suffices, or pulled off the historical. Hey, in the next 3 to 6 months, you're going to see a 3 to 7% increase. Well, you actually got, a 10% there, more than 10%. So I think it satisfies your golden cross, the 50 above the 200. Yeah, stock buyback. There you go. $3 billion of stock buybacks. It could put a floor in right now. You could have a floor in just like you have the Apple puts, like you have the stock market puts in the last couple of years. You've got stock buyback and about $3 billion's worth, which would pretty easily give you an idea here. Bill, you have your hand raised. Do you want me to unmute you for a comment? Bill, if you just type something in there, let me know, and I will unmute you for a comment. Accidental, no worries, perfect. I've known Bill for probably going on 10 years now. We started the education at the same time, or roughly back there whenever, and not a big deal. So why am I bringing up Facebook? I'm bringing up Facebook for me because, and I left the article here for Williams percent R for you. Please feel free to read through it. It's pretty interesting. Overbought, oversold. It's my indicator that I use when an RSI or MACD is not working for me. Enjoy it. But what's my concern? Facebook. So let me ask the first question. If people are to ask me about worrying or what's on my mind, right? Facebook and where I am at. I could have sold Facebook on my positions for at least a $6, maybe an $8.70 profit. But if you look at Facebook, I'm 50% upside down. A comment was just made. The only real reason to go up and for Facebook is more expected earnings. $3 billion buyback is nothing compared to the volume of the fall of the day. It isn't. I mean, in all honesty, $3 billion in buyback. If I go ahead and I put that in here, $3 billion in buyback divided by, I'm just going to say $180 is only like 16,670,000 shares. So it is. It's only 16 million. But 3 billion is enough to create a floor for the stock. Now, here's my first question. If you look at my long calls, how far out in time do I have? Correct. I have out till June of 2020. Should I have gone out with a profit? Well, yeah, obviously. Could I have outguessed the future? Not really. I kind of suck at outguessing the future. But if I was to ask you, do I have plenty of time for Facebook to come back? What would you tell me? Do I have plenty of time for Facebook to come back? $4,000 investment roughly. Of course I do. There you guys go. I also have plenty of capital to dollar cost average. Can I dollar cost average and double up on these? I could. But here's the main question. Will Facebook be trading back up at 220, or can it be trading back up at 220 between now and June of 2020? And the next 23 months, can Facebook get back up to its highs? That's the question. If you were to ask me, my answer is going to be yes. They still haven't monetized WhatsApp, Messenger, or Instagram. God, they only have what? 3 billion different accounts. Now, some of those are doubled up where people have an instant messenger, an Instagram, and a Facebook account. But do they have 3 billion individual customer base? or 3 billion active users? Most definitely. Probably have more. Is there a huge opportunity for Facebook to go back up over time? I would have to say yes. And I'm only saying yes, not because I'm in it, but because that's kind of what the numbers dictate. Not only that, we've got called out of plenty of stuff last month. So I've got cash. We're on a $4,000 investment on a $250,000, or I guess it's only 21,470, a $2,147 investment to be into it roughly about $6,200. Isn't that bad of an investment? Yes, I've got some people with 4 contracts. If you've got 4 contracts, they're probably over $500,000. So on $500,000, we might have 6% at 31,000 in it. But there is an opportunity. Other opportunity. Can I not short calls against the long calls? I can. If we had the bottom drop out of us here at 165, could I add long puts and knock off some of the cost basis? We can. So because I have the time, I can sit back, and even though it is one of my concerns, I don't have to worry too much about Facebook because I've bought myself enough time to be able to get through my pressing issue, and that's their horrible earnings report, which probably not much is going to happen until the next earnings report, in all honesty. Dow Jones Industrial Average, still technically bullish. Rebounded from the lows in June and the start of July. Pretty good month. In fact, I think it's the best month since January of this year. We'll see exactly the same thing on the SPX. And we'll see a little bit of growth in the NASDAQ. But if you were to ask me, looking back at the charts, bullish for the Dow, still technically bullish for the S&P, although that's looking to change. And we are now technically bearish on the NASDAQ. Can anyone give me a reason why our bearish indicators on the NASDAQ might turn tomorrow? Any reason why our bearish indicators on the NASDAQ at support, which I think well, you know what? We are at support. We gained it back today. Good comment. We are at support. Mod, I'm actually thinking of something else though, but that is 100% correct. What else could I be thinking of? Not oversold. I don't see our NASDAQ oversold. Oversold would be down in this range, right? Today's volume. Today's volume is nice, but it doesn't quite match that one or that one or a nice one right there. That was a pretty good one there too. What can I be thinking about? I'm going to give you a doji. That is a good opportunity, but let me give you a hint. $1 trillion company. Apple beat earnings. There you go, Mon. Perfect. In fact, let me read a little bit of what happened to you. Or I get to change. Apple, not typing very well here. Apple beat earnings. And I'm pretty sure if you look at Apple, it's going to be like 3.7% of the S&P and 7% of the NASDAQ. But Apple beat earnings. $2.34 versus an estimate of $2.18. If you look at revenue, revenue came in at 53.27 billion versus an estimate of 52.34 billion. So it's kind of funny, right? It only beat by like $900 million is all. 41.3 million iPhones sold versus, well, I don't know what they said. I think it was 41 period. But the ASP, average selling price, came in at $724, which means more people are buying the iPhone X at the higher, I was going to put cost in there, but the higher price, which means more revenue for Apple. A 60% growth in wearables. iWatch, iPods, iBuds, I think they're called. What else do I have? Services. Services came in at a whopping 9.55 billion versus an estimated 9.21 billion. And Cook said on pace to be a $14 billion a quarter revenue. Kind of inconsequential, but forward guidance came in at 60 to 62 versus an estimated 59.47. Anyone know why that would be important? Why would forward guidance beating the estimate, why would that be important? If you have no idea, type in a couple question marks. Might just be something I do, but any ideas? Usually this will mean a September release of a new phone. When you see this quarter that Apple beats, usually means or raises their guidance above and beyond, it's because they're going to have a new iPhone release, so they're boosting their numbers for people buying in. And one more, not really majorly important, 1 billion, can't spell, 1 billion transactions last quarter. 1 billion charges of some kind Apple made to create $53.27 billion of revenue which means, $5.32, almost 33 cents per transaction. This past month, I know bought a couple apps, so there's probably $60. Got charged for my iCloud storage, $2.99. Geez, that puts me above that range. Pretty amazing. What it also means is Baidu and Disney should also follow suit. Baidu, because it works with Baidu for their search engine, and Baidu's numbers, it looks like they might have beat on the top line, missed on the bottom line, but Baidu, haven't read through it. Baidu, looks like Baidu fell short on the revenue, and they also fell short on their forward guidance. But of course, they beat on earnings per share. Some heads up, $2.74 adjusted for one-time gains and costs. It could come to $3.18. The average was $2.63. Posted revenue of $3.93 billion. Analysts expected $4.01. Revenue range for the quarter ending in October, $4.02 billion to $4.23. Analysts expected $4.4. So Apple usually will pull Baidu with it. Right now, Baidu is up 1.67%. They're up $4.12 after they lost $4.22 on volume of 305,000 shares. On the flip side, Apple's up $7.66, on 8,448,000 shares. Disney was up 93 cents today at 113.56. They're down 7 cents after hours for 664. I've just noticed Disney also seems to run with Apple because maybe Apple is more kid friendly and you see a lot of kids watching some Disney movies. Just a heads up, average work week on Friday. Tomorrow we'll also run through ADP employment. Nothing internationally that's important, but our FOMC rate decision could be interesting tomorrow. Most likely no rate hike. If you were to ask me, we might be surprised. We might get a rate hike in July because in October they might not want to raise rates due to midterms, elections that are coming up, which means they have now October and December to raise rates twice, where they also speak afterwards. So with only 3 rate hike opportunities where they can speak afterwards, wouldn't surprise me. It would be a shock to the investment world, but watch them raise rates this month, tomorrow, nothing in October, and raise rates in December for their 4 times through the fiscal year. Abraham, I'll get to your question. I'm pretty much set for earnings, nothing internationally that I found interesting. Please go through and read the Morgan Stanley article. It's about Jamie Dimon talking about quantitative easing, getting in and out. No, it's not. Morgan Stanley, the biggest sell-off. Some pretty interesting information from Morgan Stanley on how the FANG stocks can lead us to our well-documented and precedented lack of a correction, 10% or more. Doesn't necessarily mean you're going to bear market, but they're calling for an ugly drop. Please read about Jamie Dimon's comments on the quantitative easing, getting in and out of it. I did find this was interesting in an S&P article on how, or just 2% from the record, and we could push it over the top. We might see that tomorrow. And also pretty interesting is David Einhorn's hedge fund is down year to date over 18%. he is just getting blown out of the water. With that said, pretty, I don't want to smile about it, but pretty interesting when someone big like him guesses wrong on when our correction would occur. So how do you see Caterpillar? Caterpillar just had earnings, and I also thought Caterpillar earnings were pretty good. I'm not actively trading Caterpillar, but it was a pretty good setup for the in-the-money bull call. It did not get above the 50-day, and it will be hard to press to get over the 200-day. But if you got into the safe option strategies bull call on Caterpillar, you could have exited maybe today at a 1-day 8, 9, 10% return. After hours, Caterpillar, let's see how Caterpillar's trading after hours. It's up another 30 cents. In all honesty, if it's up 30 cents at a 50-day of 144.42, not quite above the 50-day simple moving average, but with the earnings they had, I would expect to see Caterpillar go higher. Deere, Caterpillar, both of them could be affected by tariffs. So I think you will have a little bit of whipsawing involved with owning Caterpillar. Any other questions? In all honesty, that's about all I have for you today. Any other questions you all would like to ask me? Yes, so I mentioned Disney. Yes, Disney is one of my core portfolio positions. Disney does not report till I believe it's about the 6th, and it's the 7th, I believe, of August. And I don't think they're confirmed yet. Estimated next earnings date is the 7th of August. We went through our dividend on the 6th. So, in all honesty, Disney just bought Hulu, has everything to compete now, for all intents and purposes, with Netflix. It only cost them $71 billion. Some of those assets are going to sell off. They could probably sell Sky Networks, and they have to sell off some of their sports channels. There's a good chance, or a realistic chance, that out of that $71 billion investment, they could recoup up to $40 billion or more. So Disney's in a good position to see a higher multiple, like a Netflix multiple. So Lance, that's my comments on Disney. Any other questions? Am I in Baidu? Of course I'm in Baidu. So a little interesting thing on Baidu. I had 265 long puts, and I rolled those down and out for August from an August monthly to an August 5th week, 31st, 250s. I captured about $9.87 on a $15 drop on Baidu. I also captured $4.50 on short puts that I had down at 230. So I rolled my short puts down to 220 or 225. I went into Baidu's earnings, seeing as it's just dropped from the 284 down 34. It was like $38 today from the highs, well over 15%. This is usually Baidu's stronger quarter, which they did beat on the top line, but not the bottom line. I ran Baidu earnings with at the money 250 August 31st, 5th week long puts, and I've got short puts down at 220 and 225. They are up after hours right now, but I'm not sure if the volume of 300,000 is significant. So let me take a quick check. Average volume is 4,100, 44.1 million. So yeah, it is almost 10% volume. They will most likely bounce up and maybe go towards higher highs, but I would wait till tomorrow to see. I just captured $4.50 and about $9.87. So we're talking about $14.30 of a $15 movement down. And I wanted to put my puts at the money so I get the best bang for my buck on their earnings today. So David, hopefully that answers, or Lance, whichever one you were, David or Lance, whichever one asked that question. I hope that answers that question for you. And Mary, Disney, where do I think Disney will be going to? Disney, I would expect to at least test its previous highs of 122. So we've had quite a run. If I can pull up a chart really quickly on Disney, Disney has had quite a run. And Disney's run has happened in a pretty short period of time. We just went from 103 at the beginning of the month to 113, about a 10% movement up. We're also now overbought. I will most likely, if we see this bounce up to that 115, I will most likely continue to roll long puts from 105 to 110, from 110 up to 115. They will have to be perfect, and I'm not sure where it's going to go to, but I would definitely expect and plan on Disney going back to test the 122s. That's where I would be at that point. Mod, so Kevin, are you all set for the Morgan Stanley biggest sell-off when it comes? No, I'm not all set for it. In fact, I somewhat disagree with Morgan Stanley, excuse me. And I would not, I think their timing is off. And I know you shouldn't time tops for bottoms, but the timing for the correction will most likely be more willing to happen in October. Why would I say October? We'll have earnings events, we'll have midterm elections, we have $560 billion of treasuries running over, or turning over, which means we should maybe see some price increase on the treasury interest to get them all sold, to roll them over. You have China creating their gold-backed yuan oil currency. So there's a lot going on in October that at that point I will do a better job of protecting, not only for earnings, but that's where you'll see me probably go into full callers, where I will add some way out in time into next year short calls. They'll completely pay for long puts so that we'll be ready for a drop through our October earnings in through October, November. We might see a little bounce for Christmas rally, and then I think our bigger drops will end up coming next year. A lot of that will also be currency based as we weaken the dollar and or get the dollar strengthened through these tariffs. So the honest answer is, am I all set for Morgan Stanley's big sell-off? I am not, but I will be when we need to be, and it'll most likely coincide with earnings, which we'll be prepared for down the road in October. Abraham, do you agree with Morgan Stanley report? I do, but I think their timing's off. If you do, what do you plan to do? Again, going into full callers, where I'm going to probably go out 4 to 6 months on my short calls to pay for the majority of long puts at the money, and that should happen in that October time period. Good questions, you two. And if I got those answered, please let me know. If not, type it in one more time and I'll try to do a better job. Mary, have I been frustrated this past week? I could unmute Keeve, and Keeve would say, yes, I've definitely been frustrated this last week. But the good news is, when most of this happens during earnings, I've got some protection in place to be okay. So the big drops last week and this week haven't affected me to the full amount. Facebook definitely did hurt because I took profits. We sold out of Facebook an average price, I believe, like 209 with our covered call credit. Getting in the 160s, the low 170s. So I've already taken my Facebook profit off the table in the stock ownership, and I've converted that to way out in time leap long calls. Doesn't mean I don't get pissed off when I see it lose half its value. Or more importantly, Kevin, couldn't you have taken a profit? If someone was to ask me that, a couple of you are here today, I'd say, well, yeah, I could have, but I didn't choose to. I mean, for crying out loud, we had price increases on Facebook up to $300 a share. Kind of caught everyone with their pants down. So yes, I took a big hit on leap long calls. In all honesty, for the most part, I am playing with the house's money. I do have a couple contracts out there for new money that I was trying to put to work, and I've got plenty of time for them to come back and the ability to dollar cost average them. Yes, it was ticked off. In fact, I would unmute Keith, but he'd really soiled my reputation, as he told you. Some of the new four-letter words I created as it was happening, but I'm okay. I'm not panicked where it's destroyed a portfolio. I wasn't over leveraged in it, and I have opportunities in front of me. So, Mary, I hope that answers your question. If it does, let me know, and if not, don't ask it again. Of course, you can ask it a different way, but hopefully that's getting all right. Good. Thanks. Okay, so good. Kind of a little tongue-tied there. Any other questions? If not, guys, let's have a good week. I will talk to you again next week. Appreciate you all being here. Nice to have 17 in here. It's kind of a larger group than I normally have on some Tuesdays. Rich, again, give me a quick call if you have just 2 minutes. And Lance, if you don't mind, give me a call tomorrow morning, preferably around 9 a.m. Mountain Standard Time. Appreciate you all being here. Hope this was helpful. Look forward to talking to you again next week, and have a good night.